What is up, YouTube? Welcome back to another backtesting video. I think this is part 5, if I'm not mistaken. But I have noticed that there are a lot of new people in the comment section and also a lot of new subscribers. So, just to explain real quick what this, kind of a series is just a video or videos of me backtesting live, right? I'm gonna backtest live with you guys so you guys can see how I backtest, which entry models I have, which setups I take, how I actually journal all the trades that I take, and how I actually learn from it as well. Because I got a lot of questions from other traders regarding, hey Lars, I want to backtest, but I kind of don't know how to backtest. Or me myself, I see a lot of people backtesting, but they are not learning from their backtesting and journaling and reflecting on the trades that you've taken. That's the most important part of the backtesting because that's how you learn. If you keep on backtesting without reflecting on the trades, you're just going to keep on making the same mistake over and over again. So this is just a video of me backtesting live so you know how I trade and what I look for, because I explain my thoughts while trading, and you can also see how I journal. So let's just grab the journal that we have so far in front of us. So as you can see here, I've called it backtesting journal, and we have traded gold. As you can see, the XAU USD and Pepe USD, and the last series was of Pepe, and we took 5 trades in around 5 days. And as you can see, I have the date of the trade in this column, then the time of entry, whether it's a long or a short trade, the confirmation, and then the result. And for all the new people, what this is, I basically have made my own entry models. Okay, I've made my own entry models, and I have given them a number. They're ordered by number. So I can tell you about, if I put out like a 1.13, that's like regarding Wyckoff Model 1 accumulations or distributions. And then 6 is related to a market structure continuation. And 3 is, at the top of my head, 3 is around, I think, Wyckoff Model 2 accumulations or distributions. So I've made my own entry models, and then the decimals are just variables. Do we have a return to zone, aka liquidity? Do we have a reconfirmation? Do we have supply chains or demand change? And this can all sound pretty complex by now, but once I'm trading and you can see it live and you see me journal the trade live, it can kind of make sense. So I'm not gonna, just put out my entry models. I'm not gonna put my entry models out there publicly, but if you watch the whole video and you see me take trades and write down certain numbers, you can kind of get an idea which on entry models I have. Because if you've watched all backtesting videos, you kind of already know by now, right? Because these are all trades I have taken live, yeah, and you've seen me made it and take the trades live and note it down live. So last time, we went over the notes on these trades and we applied the potential learning moments on the Pepe trades. And kind of if you look at it, you can notice how we are already learning in this series, because the notes that we wrote down during the first 16 trades on gold, we have not written down the same notes on Pepe because we have not made the same mistakes. If you watch my previous video on Pepe, which I highly suggest, the previous backtesting video, you can actually see how I literally in a live environment almost wanted to make the same mistake by trailing my stop loss, but I didn't, because I realized that I was making that mistake over and over again. Here, while trailing stop loss, watch out. While trailing stop loss, watch out. And I actually had a winning trade, which was like, I think 6%. I think it was this one, or maybe it was another one. I'm not sure. Yeah, you can just see how even I still keep on learning, right? So just checking out the notes from the last backtesting session on Pepe, we can see we had a trade on Sunday, indicating that, Sundays and maybe even Saturdays, I've noticed myself, are actually pretty tradable on the Pepe USD pair. And then I said, watch out with taking partial TPs in the distribution schematic, range low is the target. So, okay, if we have a distribution, don't try and take partial TPs too much. because the overall target is the range low. And then potential PO3 when trading a potential macro low, watch out for extreme manipulation. For the people that remember this trade, it was actually pretty nuts. What I was talking about is how we had this massive PO3 schematic going on, where this is our range, this is our manipulation below the range low, and of course what is to follow is the expansion up, a very high time frame PO3 schematic that actually worked to perfection. We already checked this in the previous video, and what happened is that I got trapped in this local PO3. So the manipulation phase of the bigger PO3, you know, it had its own little PO3 with another range here, and then your manipulation below the range low. There you go. And then the expansion to follow, right? And I got trapped, you know, that, you know, we didn't find a long entry on that model 1 here, and we had a model 1 here, 1, 2, 3. But instead of hitting its target, you know, it broke structure and just hit some more demand and pumped up, because the overall high time frame objection and order flow was pointing up because of the, you know, the big PO3 schematics where, you know, you had a lot of manipulation. So that was just regarding that node. For more information, I highly suggest, again, you test out and watch my latest Pepe backtesting video, because there were a lot of nice trades and good learning moments. Putting it up again. We ended on the 20th of May at 12 p.m. So I kind of went back there already. We knew this was going to break up. So let's check where the time is now. Yeah, so we're just a few hours. We went forward. We fast forwarded a few hours. So we kind of quit. Yeah, we saw it. Yeah, we saw this pump happen, and then we're kind of here. Okay. So let me take a sip of my protein iced coffee. Yeah, it's pretty nuts, and it's actually fucking delicious. I don't know if there are any Dutchies out here, but it's an Upfront protein iced coffee, and it just tastes like an iced coffee, and it has 21 grams of protein. It's actually nuts. So I've been noticing I've been going on for almost 8 minutes now. So let me take a sip of this, and then we're just going to backtest. So I'm just going to be trading live. I'm going to be fasting forward like this, taking trades, and, you know, posting them in my journal and see what's up. Okay, everything is ready. Before I start backtesting, if you have been keeping up with my other backtesting videos, I highly suggest that you go and backtest yourself first. You know, I'm gonna do around 2 hours, so that probably will be a week of price action. So I highly suggest you trade yourself from Monday the 20th of May until Sunday the 27th of May, and then you go and watch me trade, okay? Because if you've been keeping up with my other videos, you kind of already know what I'm looking at, and I suggest you apply it yourself first and learn from certain mistakes you made by watching me, okay? If this is your first time watching me, you can just watch me, okay? So let's get straight into it. So building some context like I just did before is that we had this massive range going on where we're kind of expecting this to just eventually pump, right? We're expecting this to just pump up towards this high over here because of the massive PO3 schematic. But that doesn't mean that, you know, in these moves like this, we cannot catch these trades and these trades and these trades and these trades and all the tiny moves within, okay? So that's just to build context. For now, we're expecting this range high to get taken pretty easily. Yeah. Let's test which is the highest time frame structure on that move. 3 hour, 4 hour, around 3 hour structure. Okay. So kind of breaking that high will confirm, that we're coming up way higher. We're in this range as of so far. And we kind of also know from experience, I can kind of tell that whenever you have a PO3 schematic with a nice return to zone, where you have your range and you have your manipulation below the range low, trapping retail traders into thinking we're going lower. And then you have the expansion. Just because it's a pretty familiar concept, I kind of noticed that whenever you have easy to sweep liquidity in a PO3, the first move will be explosive. But from there, you don't immediately hit your target. You kind of, come back down, maybe even more, and then you hit it. It's very familiar. It even trapped me in the beginning plenty of times. I'm immediately thinking they were going to have that move up, and it kind of extends itself like this, which is still completely valid and fine. But you have a lot of breakout longers that, want to catch that tiny move because they kind of miss the whole move, and they want to still enjoy some profits, and they get trapped. Okay. You really have nothing for real resistance above us. Let's put that range on our chart. Put that range on our chart. Yeah, there's really nothing to stop price. But as I said earlier, it can cool down after such an aggressive move. Let's just check on the lower time frame. Really, really nothing here that's sticking out of like, oh, price should reject from here. This is your most important market structure low. High, low, high, low, high. Preferably you do not lose that structure for the PO3 to continue itself. But let's see what price does, because it is Monday morning. It's always good to know. It's also an improvement point for me, checking where price is from a timing perspective. Not doing that much yet. Creating a very local range here. One tap, two tap. Three tap. Some nice sell side liquidity below you. And then I think your 1 minute structure is kind of around here. Supplies in above you. So kind of breaking that, coming back up. That could be a short scalp towards that range low. Reasoning for that retrace is it doesn't have to retrace, but if you enter on the break and you have to put your stop here, it's not risk to reward worthy. You're only you're making 0.5. But if you come up for that retest, mitigating all supply, really giving price no reason to come higher after the break, then you have a 2.5 RR. So that's why it's a requirement for this trade. And the third tab actually did something nice. It took the liquidity of that high. Okay, that was a very aggressive move. It was expected because we had that sell side liquidity here. So whenever you break that low, you grab all those stop losses, people get stopped out. Do have to say that now this retest, even though you broke structure, this retest becomes less good because you already, you hit almost all liquidity besides the range low. So you don't really have a good target anymore. if you break structure from the low up, I would give it a shot, for a more extended 1, 2, 3. But yeah, the break was so significant that it already hit that. It came back for the whole range supply, which is completely valid. And then we went lower. But as I said earlier, this is not risk to reward worthy. Only 0.9. I kind of want to aim for, at least 1.5. And unless, at least preferably like 2 and above. But if it's a very high probability setup and I expect it to play out, of course I would like a 1 to 1.5 gain. Either way, if I'm that confident, right? But as you can see, nice little Wyckoff Model 1 distribution schematic with a return to zone, which play out to perfection, but, not risk to reward worthy, so that's totally fine. Price going lower from there. That is something I wanna. That is something I've noticed lately. It is something I've noticed lately that, the risk to reward is not worth it if you look at it from this local range perspective between this point and that point, because the technical target of a Wyckoff distribution is the range low. But you have to look at macro context, because let's say it's very obvious that price will come for these lows as well. Even though the target is technically here, it can run down towards these lows. So you can still take it because, if it comes there, you have a 2 to 2.5 risk to reward, which we just had here. However, in this macro context, I wouldn't really say that because you're in an uptrend and you have a PO3, which is bullish. So I still wouldn't take that. But in general, that is something I personally need to be more aware of whenever you could have a potential runner and you don't want to miss the trade because you think the risk to reward is too low and it ends up dumping, because I had that on gold last week. So just to remind myself that if we see another setup and the macro context is also pointing a bit more down, we can still take it and try. Just kind of swept those lows on the left here. It's not showing me anything that significant. You see that these things and these markets, even Pepe, are just run by algorithms, because I'm on the 1 minute and I don't use the seconds chart. But as you can see, we have a 1, we have a 2, we have a 3. We get to move up. We have a 1, we have a 2, we have a 3. It's like it's everywhere. Everywhere, any time frame. It's crazy. Anytime, any time frame. And that shit works. Let's clean the chart up. Also very important, always keep your chart clean. We have some resistance right there now. We're kind of in this local range. Okay, so we're deviating the range high, tapping into that resistance, but there's no real structure between this leg and this leg to confirm a potential range deviation. I'm going to put a dot here and a dot here to know where my initial range started. And now we already have a deviation because this could turn into an accumulation, right? And here's your initial range high. First sweep. Okay, so this did come up. This did come up and swept some liquidity and then broke internal structure here. You could have shorted that retest as this being the potential third tap of the Wyckoff Model 2 distribution schematic. It did hit its target, but it's a bit more sketchy, if I say so myself. Now we're deviating the low, creating a potential accumulation schematic because we're still in an overall uptrend. But that doesn't mean that the distribution is 100% completed, because it could still... Oh, that's actually perfect tap. What I'm thinking is the only way I see this Model 1 accumulation failing is if we hit this supply zone, taking out these highs like this, and then getting that break of structure. Because then we could get a better Model 2 distribution. I would long the accumulation if I had a confirmation, but I would long the accumulation if I had a confirmation, but there is no confirmation because there's no valid structure in this move down. It's just one move down. So let's put this high on our chart as the liquidity high, because as I always say, the third tab needs to meet either one of the two following requirements. Needs to grab all liquidity or hit extreme supply. And this will be my extreme liquidity point by now, because we also have that supply above. Yeah. It's not the most beautiful looking supply. Not at all, but I'm going to put that there just in case. Look at that. Look at that. So, took the liquidity, hit the extreme supply. So it meets the requirement for the third tab. Now it just needs to break structure from the low up to confirm that this is going to end up like a Model 2 distribution. A 1 tap, 2 tap, 3 tap. Let's check the structure from the low up, because we do have structure. I have a high, low. This is no structure. High, low, high. But let me just confirm if this is actually structure. This is actually structure. Okay, just because we have these two consecutive down candles. It's a sketchy 1 minute candle, but it is technically speaking structure. Now, we have to be aware that if we break this low, my stop has to go above that high. if I target the low, that would only be a 1.17 risk to reward, which is not ideal at all. But I'm already seeing this 1 minute supply zone that was created tapping and sweeping, tapping into that supply zone and sweeping that liquidity. So since it's backed by a Wyckoff Model 2 distribution that would be confirmed once you break that low, this would be called an institutional block. Okay, let's see if we break that low. There you go. That's actually a very aggressive break. That's the follow through you would like to see. I would call this now an IB, standing for institutional block, which is simply an order block backed by a Wyckoff schematic, and they work well. Now, it doesn't have to come back all the way there, but it would be the best. I'm just checking for another OBYM. It is the only order block. Now, if price comes back there, that will mean there's no reason for price to come higher. Like, it would tap all supply and it would have swept all liquidity for this Model 2 distribution to play out. That would be extremely nice. I don't know what's the risk to reward on that. That will be a 1 to 5, which is absolutely amazing. But I would want to see a rejection. Okay, I would want to see a rejection, not just, if we come back up with a massive pump, I'm like, maybe this fails and it turns into like a higher low for the Model 1 accumulation, right? That's also still possible, but as of now, because we had no confirmation for the Wyckoff Model 1, and it does have the confirmations for a Wyckoff Model 2 distribution, we have to look at the accumulation or at the distribution and put more importance on the distribution than the potential accumulation. So let's just check how price comes up there, if price even comes up there, because this would already be enough. This backtest could already be enough for lower, but it just wouldn't give us an entry. Oh, look, so I want to see at least like 1 to 2 downwards candles because we came up pretty aggressively. So that could mean that, the market maker is actually pushing it up from the Model 1 accumulation perspective. Let's just see. So right here, I would actually short this and I would target the low. Just because we're seeing the rejection, right? I would actually short it and target the low. We don't have the 1 to 5 anymore, but we just had to be sure, right? And the 1 to 3.25 is also amazing. So let's see what happens once we start. There you go. We're getting the follow through. And there you have it. Beauty. Beautiful planned. Literally just beautiful planned. Absolutely amazing. Even exceeding our target, taking out both these lows. Let's see if we took out both the lows. Yeah. And that's because it was 2 liquidity points. Like, if this range was going to break up, this Model 1 should not have been failing. So, because the Model 1 is failing, why would price have to stop right here? If you have never swept the range low and you had the distribution, you can say, okay, I'm going to look at the range low as my target because from there it can turn into an accumulation. But we already had the accumulation, but we saw it failing once it started breaking the structure. So then you can actually exceed your target to like a liquidity point, which is this. You had these 2 lows here very close to each other, and also this being the 10-minute higher low for a higher high. So for now, I am gonna put it here because that was the initial plan. But, as an improvement for myself, I should realize that sometimes we can actually maybe exceed our technical target of the range low because of, the bigger context, which I also said in the beginning, right? So what we do now is we grab our journal. Okay. We grab our journal. We put trade numero 6. What is the date? It is the 20th of May, 1555. A short, and then let me check the entry model real quick just to be sure. We had a Wyckoff Model 2 distribution. .1. Okay. 3.1. Net gain 3.25%. And then we're going to put as a note, we're going to put pay attention to the macro environment, to the bigger or to the higher time frame environment, to the higher time, because it doesn't really have to be macro, right? It could also be, if you're on the 1 minute, you should take the 10 minute. Pay attention to the higher time frame environment. Pay attention to the higher time frame environment. So we have a nice Model 2 distribution short, and I've set as a note, pay attention to the higher time frame environment for a potential runner exceeding your initial target. So now next trade we should check, is there a reason why this could come lower? So we can have a better risk to reward, because it's the same entry. Look, a risk to reward of 3.25 is amazing, but it's the same trade, and you could have gained almost an extra 2% on the same trade by doing nothing, by just exceeding your target, because it was a valid setup, for potential, or for your target to potentially be exceeded. So, very nice trade. Executed perfectly, pre-planned, good thought process, beautiful behavior from Pepe on the pair. Very nice. Okay. Let's check what is up with Pepe. We got demand lower that it maybe wants to tap. It got demand lower, but we're still in that PO3. So it could just be a sell to buy, right? Could just be a sell to buy. Let's check. Timing. What was the timing of the trade? 25 minutes into New York Open. Okay. Oh yeah, look at that recovery. Wow. Look at that recovery. That's beautiful. Was there a man here? Oh, look at this. Look at this little fella. Boom. Beautiful. No confirmation or entry model to long this though, but it's very nice to see it working. And then there you go. You see how it taps that range high? Beautiful. And also just the pre-planning of, telling you guys in advance of, yes, this is the target, but I wouldn't be surprised to see it cool off before going higher. Well, look what happened. We had that cool off that even gave us a short setup before we had that move up. It just needs a bit more liquidity for the squeeze, which is very typical. So note that down. The PO3, in the beginning, it's pretty fast, but then it can just cool off. People forget about it until it picks back up. A lot of people get trapped that way into thinking, oh, let me just enter here because we're going to go to this high, and then, they're underwater until they close it, and then when they close it, it pumps. That's just how it works. Now, just to look at some potential stopping points above us, because, I do expect, oh, boy. That's one thing I always say they need to change. I switch to the 4 hour, and I just see what's going to happen. Look at that candle. I was about to say, let's look for some potential stopping points for price in this potential squeeze. Because as I said, we're also in this massive PO3 where this is your range. This is your manipulation. And this is your expansion. And just like before, it can squeeze up and then form a range, cool off before it squeeze up again. Very normal. So let's see. Now we know it pumps through anything in here, but there wasn't anything really significant in here. I'm just seeing a trail of liquidity. And low-key, I'm not seeing any resistance in here. But I'm also not seeing any resistance here, just liquidity. And I'm also not seeing any resistance here. So we're expecting a squeeze up. So hopefully we will catch a long in a valid way. But I'm not really keen on, I can't really find a resistance point. So we'll just watch how price develops going up. Okay. Let me take a sip. That's a beautiful. That's beautiful. Okay. Locally we have another range at the range highs. Not really any structure to look for anything. Maybe it could become a model 1 that hit its target before we have the move up, and we can catch, the short into a long and ride the long up, but we will see how it develops. Let's extend this. 1, 2. Boom. Whoa. Hour before, look at that. Hour before New York closes, we get a massive move up. Not really giving us an entry. I would have hoped we swept that low for a potential range deviation play, but really just, some sideways price action and then boom. Okay. Don't have to pay attention to that range anymore. That's for sure. This is a support zone. There's not really any resistance. So let's just follow price action and see how it develops. Higher low, higher high. And higher. What's like a liquidity point? For maybe we can have like a stopping point there. I think this is a pretty significant liquidity point. So maybe we have a bit of a stopping point once we take that. And then we gear up for the next leg, taking these highs. But now we have taken all these highs, right? So I think those are kind of my two liquidity stopping points. And you can see the rejection coming from there, which is not a rejection. It's just, I think, more people taking profit. This is your 1 minute higher low, very far away. This is where we grabbed it. We're coming into a time zone where I don't really trade. It's 11 and 12 p.m. Kind of forming a range here. Some demand below the range low. I am aware of these are time zones where I don't really want to trade. Just to see if we can pass through Asia. Did it take that high? It did take that high. For a potential 1, 2, 3. Wyckoff model 1, but I don't think that's structure. No, there's no structure. It's even lower. Okay. So there's no structure between this leg and that leg until this low, which is literally so close towards the low below that. And we do have some demand below that low. So not really anything yet too short. Came back up. Very tight price action. Even SFP'd it. It's not a break at all. Just put this low on the chart. And we even came higher. Yeah, that was expected once you had that rounding up effect prior to breaking that low. It couldn't even break that low when you had that curving up effect breaking out from the range. Having a tiny model 1 here, 1, 2, 3. You have it everywhere. Literally, you have it everywhere, but these aren't tradable. Now, let's zoom out for a moment to see where that high is. Because that's also important to know. Get rid of this. See what's my main structure from the low up. That's definitely this low. So here is the all-time high on Pepe, I think. Yeah. Okay. All-time high on Pepe. Boom, boom, boom. Looking like a Model 1. It's all in the lower time frames. Okay, now we're getting into interesting time zones again. 8 in the morning. Let's readjust. Still higher lows, higher highs. There's the all-time high. This is your main market structure high to break from the top down. It's low, lower high, lower low. Once you break that high, you can expect higher low for a higher high following this higher time frame pull. Boom. But it's taking its damn time though. So when you have a market structure pull that goes like this, very extended, oftentimes you just deviate and go lower before coming higher or going higher. So let's see. I like this kind of range that we're creating here. Yeah. I'm gonna call it like a 5. Like a 5-minute range. Even a 10. It's even the 10-minute range. Yeah. I'm liking this little range. We're 1 hour, we took that high. And we kind of have some liquidity below the range here. But we also have some liquidity above these eyes. Let's see how this range develops and if it has a setup. Range high sweep. It swept a high. If we break this, that could confirm a model 2 distribution just like before. It's a bit on the lower time frame though. But the risk reward is worth it. Very tiny break. There you go. This is your break of structure. Let me check the volume profile. Kind of a tight range as well. So that could be nice for that move down, you know? The volume area low is almost at the EQ. Right here, volume area low is almost at the Q, meaning there's no volume in the discount section of the range, which is just the upper quadrant of the range. We deviate the volume area high, so maybe this can come down. And this could be, you know, one of those cases where, hey, we do have some sell side liquidity on the left. However, on the 5-minute, we we did not sweep the low, so that will mean the range low. That will mean the range low could turn into an accumulation, which is the time. Boom, boom. Yeah, you can give that a shot for sure. On that break, like I put my entry. On the lower time frame, that looks like a accumulation. Okay. This will be the entry. It has the potential to run, but we haven't really tapped that low yet. So, you cannot say there's an accumulation at the range low that's potentially failing. But let's check. Oh, that's not what you want to see after that break. That's pretty aggressive. Leaving the volume area high again. Oh, even wicking you out immediately. Okay. Okay, interesting. I'm pretty curious to see what happens next, but let's note it down. Let's note it down for sure. Tuesday, 21st of May, 8:24. Trade 7, 21. Let me check real quick. It was a 3.12. Minus 1%. Actually, our first loss in this whole series. I'm gonna say. Wait, let me put it like this: 1% minus. And then I'm gonna say, really low. I'm gonna say model on the 1 minute only, indicating that it is a very low time frame setup, but they oftentimes do work. So I am pretty curious how this develops. Let's check. Okay, maybe it wanted to grab more of these highs on the left and create a model 1. That could definitely be the case. Where you have your 1, you have your 2, you have your 3. That could happen. That could happen. Let's check if we can break that low. Building a lot of liquidity towards the downside. There is your break. Okay, this confirms the break. But the risk to reward isn't the best. The break is here. Stop. I will put my stop above this like internal high. Not really this high, because in general you don't want to see it even come there, because that would kind of indicate it's failing. It could happen, but we already had the extreme liquidity mitigations here and still wanted to go higher to have that model 1 trap. I have seen that happen. So I don't want to see it come past that kind of 30-second high. Probably if we go to the second structure, this will be a downtrend like this. So just to refine it, I would put my stop there, but then it would still not be the best RR. So on any pullback, I would look for a short. Let's check the volume profile. What would that RR be? There you go. Then it will be worth it. Yeah. So we're really on a low time frame here, so there are not really any significant POIs but you just want to short any backtest when it's risk to reward worthy. And at that high right here, we had a 2 risk to reward. So around here, you could potentially short, put your stop to the low. And we have to remember this could exceed our target. It could exceed our target towards like this low, which is like partially that liquidity fill. Because overall we're still moving up, but let's improve. Let's improve and see if we can take some more liquidity on the left. The difference is between, you know, this potential runner and exceeding your target is that here we haven't had a proper range low sweep. So we cannot say that an accumulation is failing because this could still turn into an accumulation. Okay? So that's the difference into potentially taking all your profits out here instead of here. But let's see. Let's see. Let's see. Boom. That's definitely like... Ooh, we grabbed those lows here. We grabbed the lows there. I would definitely, you know, take profits here for sure at that low. And now de-risk myself completely where your stop loss is entry. Do we hit that partial fill? Oh. Okay. That would be a finish for me. I don't know how exactly I put it there. Oof. You know what? Because I'm feeling good, we're gonna count it. You know? Probably once I see price coming up from there, I'll be like, okay, this could potentially turn into a 1, 2, 3. So that's, you know, you should dip. Okay, what can we learn from this? Now, we can say that we were spot on with searching for a short, for sure. We were spot on with searching for a short regarding, you know, the macro circumstances of this coming up very slowly and not taking out that high, and therefore looking for a Model 2 distribution short, which was completely valid. However, that did not work out. Why? Because price still wanted to grab some liquidity on the left. From there, we created a Model 1, which we entered on and executed. Pretty nice, you know, trying to take some more lows on the left to learn from the previous trade. So that's a pretty nice trade. As I said, that we'll enter on the back test. Stop would go above that high. We would target the low. That will be a 1.84. And then taking it to that low will be a 2.66. So let's just round it up to 2. You know, we made it around 2%, taking a partial here, and then taking a partial coming up here. So let's adjust. It's the 21st of May at 8:50. Let's do it at 9. At 9. That's also on London Open, actually. That's a pretty good timing. I always forget to check timing. That could also be a reason. Nah. I was about to say that maybe it's a reason that we shorted prior to London Open, but this push up wasn't on London Open. The push down was on London Open. So 2%, 9 a.m., 21st of May, 8, 21, 10, 2024, 0900. Again, we had a short. It was a 1. Let me double check. $1.123. Oh, damn. I didn't know this. It was actually a 1.123, and I have a rule that I should take those with a 2% risk because they're a high probability setup. Model 1, break back, inside volume profile, return to zone, range and efficiency. Oh, damn. 1.123. The gain was 2%. And then we're going to say should have taken with a 2% risk since it's a very high probability setup. I'm very autistic regarding that these numbers should be perfect. There you go. Save. And then we're going to put at the previous one, we're going to say turned into a model 1 distribution, which we traded nicely. See below. And it's also, you know, a learning moment for you guys that you see me, you know, and we're watching for that potential short trade because of the circumstance and the way price is behaving. And we got the confirmation, but we got stopped out, right? But instead of me completely giving up on the short idea, I was like, okay, what could be a reason that we get stopped out? Well, okay, we still had those liquidity highs on the left that price wanted to grab. And once I saw this break, I was like, you know what? That was indeed the reason. And then we shorted the retest because the risk to reward still needed to be good. And yeah, amazing trade. Amazing trade is what followed. An amazing trade. Okay, let me take a sip of my water. Okay. Let's see what happens from here. Because we took these lows. Could it be a 1? Could it be a 2? Could it be a 3? It could be. But it's very ugly so far. Very ugly so far, indeed. Let's get rid of this distribution because it hit its target. Let's get rid of everything real quick. As a reminder, still in that PO3, still in an uptrend. Doesn't mean that we can cool off. It's exactly what we're doing again, you know? Just like I said before with the PO3, it doesn't have to hit that high immediately. It can kind of cool off, do some things before hitting that target, which is exactly what we did. Now, this is still the high to break. That hasn't changed. And then now we were kind of deviating that low. This being the range. So let's check. It kind of created its own little model 2 accumulation, but there was no structure. So we were deviating the bigger range low. And then from there we had a 1, we had a 2, we had a 3. And we broke structure right here, broke structure. But on the retrace leg, there was no entry confirmation. What you want to see is you look at the market structure from the top down between these 2 points, and you want to see it break back to bullish to confirm that third tap. But looking at the structure here, it's a high, low, lower high, lower low. So the break is all the way up here. But, you know, you're not going to enter all the way up here with your stop, you know, below that low just to target that high. So 0.24 risk to reward. That's worse than terrible. Okay, let's check how price develops. I would love a short though, you know, for that potential pump up, but we're really not getting it. There you take the high. thinking this can be our potential new range. Our higher time frame range, where this is just your market structure low. Again, you had a 1, 2, 3. You have it on every time frame, guys. It's this shit is run by algorithms, but these aren't tradable, you know. But they still happen, and then you have that pump up. Oh damn. Yeah, it really doesn't want to give us an entry on a long. That low is now invalidated because the range low is the low. And now we took that high. Now we took the high and we're starting to pump, bro. Oh boy. It's Tuesday. Look at that pump. That is crazy. This is all-time high territorium, so that becomes a bit less good for us because it's harder to trade with our entry models in an all-time high area. But this is your main low now. Let's put this here. There you go. We have some liquidity highs here. We're following this overall uptrend. We swept a lot of liquidity on this move down. So maybe if we break this high, we can have a rotation back towards this high. Now, is the risk to reward the best? About a 1.9 on a pretty significant trade. But it could work. Not my preferred entry models. It's just a market structure continuation trade in all-time high territorium. It's not the best. So I'll just see how it develops. SFP. Break. Wick low. Coming back for that extreme demand, actually. Oh. What is this? Okay. Bit of a glitchy moment, but we're back. I think we're going to tackle these highs now. There you go. Highs tackled. That's for sure. Grabbing all liquidity to the downside, hitting all demand to the downside, and then giving price no reason to come lower. Now, maybe this becomes our new range. One, two, three. this could work, but comparing the distance between tab 2 and tab 3, they're way tighter than tab 1 and tab 2. So it could always turn into a bigger distribution where these tab 2 and tab 3 are just one tap on the higher time frame. If I zoom out to the 30 or like to the 15 and 10, you can kind of already tell that this could just be one tap, right? I'm not really convinced in this setup just because we've been kind of ranging in here. Let's say we do call this tab 3. The risk to reward would be 2, but we do have some pretty good looking demand here. Pretty good looking demand here. So I'm not really this convinced in this setup, so I won't take it, but we will see what happens. We do get to move down from the retest. So let's say you entered here and you put your stop loss above that high. The moment the retest is done and we have another break of structure here, you move your stop loss from that high to that high, already de-risking yourself, you know, by a lot. You'll probably go from a 1% risk to like a 0.4% risk. And now you're coming back up again. And price took the low once more. So now your stop loss should be trailed here because there's no reason for price to come back up again unless it wants to make a bigger distribution schematic, where in that case I would just enter again on any signs of weakness, right? But now you should be risking around 0.4% of your setup. And what I would even do, is hit a tiny take profit here. Let's say you hit like a 20 to 30% TP down here. Your stop loss and your profit will be equal, making this a risk-free trade for yourself if you do get stopped out. Because now we tapped into that demand, right? Yeah. Look at that extreme demand. It's very typical for price in all-time high territorium to hit extreme demand and just go higher. So I would hit a TP and be de-risked. This would be your stop. Oh, there you go. Look at that. Wow. What a call. What a call. So yeah, just because we're an all-time high a territorium and this wasn't looking the cleanest from a market structure perspective because it was so tight, I didn't take it. But even if you took it, this shouldn't be a loss because you should manage your trade. So if you entered here, put your stop here, you see the break, meaning price should not come above this point, already going from a 1% risk to a 0.4% risk. Then we get the second break down here, making you move your stop loss to that local high. And then we came into extreme demand. And we know that in ranging environments, in a pumping environment, extreme demand is often tapped, and then we just go higher. Extreme demand being the last demand remaining before taking the range low. Therefore, you know, you should, if you are confident in the short, at least take a take profit down here that equals out your stop loss amount. So you have a risk-free trade. So that's just also how you manage your trade properly. So even that your losers aren't losers, but just break-even trades, right? Even if your idea doesn't play out, you're still not losing money. Now, this distribution is failing, which is bullish. That will probably be a break of structure. There you go. Let's call this demand, this whole area. And let's see what develops. We still couldn't get our hands on any type of long. Let's delete this for my autism. And now we managed to form a range. That's nice. Where the range low tapping into that. So we have range high, we have range low, we have first sweep of the range high. Kind of trying to break structure here, but it's not really convincing yet. And you have price coming back up again. Oh. Have a model 1, have a clean break right here. Let's check the risk to reward on that break. Around 1.75. I don't want to, put my stop loss here because price could come up for a liquidity sweep there. That's definitely possible. The break itself, though, is like at the volume area high, literally at the volume area high, which is a bit, a bit unfortunate, but that shouldn't stop it from entering. You have the break candle next to it shoots up. Stop loss. And technically your target should be all the way here. Around a 2%. It could come back up. Take all these highs because the way we came down, we kind of left some liquidity. And then dump from there. If that happens and I see a confirmation in here, I will add to the new calculate stop loss, meaning the stop loss will be there, and I will adjust my risk so that this stop loss would still be a 1% risk. But it is a clean model 1. It's always a bit more, a bit less good to short distributions in a pumping environment, but we have pumped pretty hard, so it is a valid trade. We'll just see if we are able to de-risk ourselves a bit more quick, just like we did on this schematic right here. As of now, it's around a 1.98 risk to reward. Let's see what happens. We do have some supply here. Okay. So, adjusting it, we broke back inside the volume profile, right? Broke back inside the volume profile, having another break of structure. However, I don't want to move my stop from here to here because of the second break, because we have this range supply waiting above us, right? So even though I would prefer to just come down from here, it could do this, and you don't want your idea to be invalidated by something that shouldn't invalidate your idea, right? But I would put my stop here just because we got that acceptance back inside. But I would watch it manually. I'll keep it here, watch it manually if it comes up to there, because if we come up leaving a return to zone and we get that break, I'll wait. I'll wait. But let's see what price does. Dumping down. There you go. There you go. Now, I would move my stop to entry. And we took a lot of liquidity lows. So I would already hit like a TP down here, because you might not see it on the 1 minute, but this is actually demand, right? Look at the candle that reacted, or look at how the candle reacted from this area, this massive move up. It's just something that we can call wick demand, okay? It's just something that we can call wick demand. So I would definitely hit a TP there. Let's say like 75% TP. And then they let 25 hit. Okay. So, initial entry right here. Round 1.98, and let's round it down to around a 1.6. This is 1.5.5. Yeah, 1.7. Okay. What's the date? May 22nd at 5:50. Again, a short, bro. Only having shorts here. Damn. Let's check it again. This was a 1.3. 1.3. It was a 1.7 gain. Let me make this black so we make sure that that was the last trade of that session. And now we have these 6, 7, 8, 9. So quick recap of the trade. We had the Model 1. We had the break. Bit unfortunate the break was exactly at the volume area high. I would have preferred for it to be back inside, but that's not a reason to not take the trade. We got the retest and the lower low here, but we just missed this supply zone. Therefore, I didn't want to trail my stop loss to that high, but rather keep it here. But even watch for potential wick of that with another break for that bigger like Model 2 vibe. And then when we actually dumped further, creating another break of structure. I did trail my stop loss to that high here, and then we hit our target, taking a tiny TP at wick demand and then the range low, which is the technical target. Beautiful trade. Looking at the timing, I wouldn't be online for this normally though. It's like 10 minutes before, like around 6 a.m. That's early. That's early. And then we also had that nice return to zone. There really wasn't any support here. Okay. Beauty of a trade. From here, this can turn into an accumulation, of course. First job being breaking this structure high, which we're currently failing to do. Otherwise, we're far in all-time high territorium. Let me get rid of this distribution. Potentially a one tap. Is there a reason to come lower? No. This is just liquidity now. Price did come lower. Could it turn into a Model 1? It's taking its time, which I don't like. Nah, that's not a Model 1. I wouldn't mind price tapping into that support zone. Let's get rid of that range real quick. It's really your 30 minute structure pointing up. And this could just continue to make higher lows and higher highs. Where all like the 5 to 10 minute breaks are just, for a retrace for a higher low on the 30 time frame. Okay. We did sweep all these lows now, which could be an objective. Start breaking that high, we could think about rotating back up. We're starting to break that high. The most convincing break yet. But it can pick up. Again, tapping into that demand. Just missing the demand, actually. No entry models here, but we're coming into a higher time frame POI. This is your 1 minute high. Curious to know if we mitigated that 30 zone. We did not. Okay. There could be a reason to come lower. Or maybe if we come lower and do this, this would be our new range. That would be nice. That would be easy to trade if that happens. Okay. So far we did break structure. We broke it again, and we're actually squeezing up quite hard. Let's reassess, because I didn't see much happening from a trade-wise standpoint. This is an important high to break. It's the highest time frame downward structure pull. If you break that, you will come to that high. Could still put in a lower high for a lower low on that time frame, because there is still a reason to come lower, tapping into that 30-minute zone. Then locally speaking here, we do have somewhat of a range. Kind of actually giving us 1 tap, 2 tap, 3 tap vibes that I just noticed. But there isn't really anything to aim for. You already took that low. This was a you already took that low here. This was a very aggressive move, you know, grabbing all these lows, and it could turn into an accumulation because we took the low. And if you enter here, you cannot really de-risk quickly because this whole zone is resistance. Or the risk to reward on the retest would be just a bit more than 1 if you hit your full target. And the timing is off because it's a bit before 10. So, don't really like this trade. Let's see what happens. What you would do here, there you go. Look at that. You tap this demand zone. Again, if you are like, fuck it, I still want to take the trade, even though it has a chance of it being an accumulation, what it's looking like so far, you can enter on that break here with your stop here, even though the risk to reward is not worth it. But the moment you create a second leg, if I follow this 1 minute leg here, the moment you do this on the break and you get the retest, right, and you get the lower low, you move your stop, so you're risking 1% if your stop is all the way above there, and you're moving it all the way down to almost your entry. So that would probably mean you're risking like 0.2%. And then guess what? We had another move down. And now your stop loss is entry, right? So now your stop loss is entry. So even if this does turn into the accumulation, you're not risking your money anymore. And that's just the biggest, objective in trading. To not lose money, First you don't lose money, and then you try and make some money. But this is like looking like a potential 1, 2, 3. And that would mean that this accumulation is failing, or this distribution is failing, and the accumulation is taking over, which is pretty bullish, which could send price higher. That's for sure. But the risk to reward, the break is not until here, and even that's a sketchy break. It could run to here. It could, but it's not a very obvious target, right? It's not that there's like a crazy good looking return to zone above there to take. So I don't want to take it. Let me just check if there are supply zones. You have a tiny supply zone here. Do we have something where price could come back for? that could give us a risk to reward worthy entry. We do have this. What would that risk to reward be? A bit better because it has the potential to run. Okay, now we're talking, right? Now we're talking. It has the potential to run higher, but a 1.7, that's decent. Let's see if we get tagged into it. Ooh. Oh, the timing is off again. Oh, wait, it's the same time. Okay, I totally forgot about the timing. It looked like a news candle. I was like, are we in news? Ooh. Timing wise, I'm not sure if I would take this in real life. But for now, because it's back testing and we do see the setup, we can take it, right? We can take it, and if it doesn't work, we will blame it on the timing, right? We'll note it down and say, yo, it's really not the way to go to enter around these times. Oi, this is, if we go one candle back, we made that higher high here, but it's an SFP, right? It's an SFP, and we just hit that supply zone. So it could still be the distribution. So we're really stuck here. You know, both being like the fourth tab of either the Model 1 playing out or the Model 2 playing out. So this playing out or this playing out. It's really a battle. But we SFP'd it. And I don't really see a reason to come lower than that low. So if I would take it, I wouldn't want to risk 1% anymore after seeing this 1 minute projection candle. And I will put it here. So first our stop was 1.1. Now our stop is 0.38. So that means we're risking around 0.3%. Okay? Risking around 0.3% instead of 1. Let's see what happens. And there you go. And there you go, lower. Yeah, so it was very tricky, you know? It was very tricky which side will work. But also because of the timing wasn't there. It was tricky which side would work. We were stuck between a 1, a 2, and a 3 on the accumulation side. And we were stuck between a 1, 2, and a 3 on the distribution side. Both having that break here and having that break there, right? So let's just note it down. What was the date? 22 20 2220. Damn, only 20s. Okay. 2210. The first long, it didn't play out. 0.3% loss. It was let me check. It was a Model 2. Three point one, 3.1, and then price was stuck between price was stuck between accumulation distribution. Good risk management. Timing was off. So I noted down that price was stuck between that accumulation distribution. The distribution won, but we managed our risk in a good way. And I do want to mention that the timing was off. I don't like to trade around those times. Okay. Normally, I'm also not behind the PC anymore. And, the reason why I don't want to trade it then is because I don't know what price does around those times and how it acts because I never trade those times, right? So why take a trade if you don't know how price normally behaves during those times? Now, maybe this turns into a Model 1, right? Before pumping up. Or just wanted to grab all liquidity, still being a 2. But let's just check. No. No. Few breaks, dump down. And from there we have the reversal. So this could for sure be a Wyckoff Model 1. It's actually acting pretty nice, the sell to buy. But we're not going to enter here with a stop here, right? That's not risk to reward worthy, as I always say by now. But if we can find a local entry, was this risk to reward worthy? 1.3. Nah. Was it even a break by then? Let me check. No, it wasn't even a proper break. So even though it's a Model 1 and it hit its target, and we can also say why did price have to come down there? Well, it had to take out those lows and hit some demand in here, right? From that range. Was there an order block though? I'm pretty curious. No, not really a defined order block. So these are just Model 1s that they don't give you an entry, right? And you just have to accept it. But this could move up more. Could move up more because, there's not a distribution in the making because you already had one that played out. A really rangy environment here, eh? Let's reassess. Very, very rangy environment here. Let's keep that high there. And let's extend this. On the higher time frame. This is your one. On the higher time frame, you have this. Because this is not a valid 15-minute pull. This is a valid 15-minute pull. Meaning your starting point is this low and that high. Which would make for new opportunities, right? Happens all the time that those Wyckoffs here, he did its thing on both sides, did its thing. And now these points have become irrelevant. And you have your new starting points. knowing that you have your 1, 2, you have your 1, 2. Did price take out that high? It ever so slightly did. Oh. So you had your model 2 accumulation. That broke structure here. That hit its target here. Even had that LPS here. You could say, yo, isn't this a model 2 distribution? But as tempting as it looks, this is not valid structure because you don't have the 2 downwards candles, the consecutive downwards candles. So it's not valid. Price came back for it, and then this is where we swept it. This could be a nice trade, but one, we're in the middle of Asia. That's one. Second, I don't like to target the range low when the range low has such a clean accumulation schematic with the 1, 2, and the 3. I would prefer for that one to get tapped, but the risk to reward is already there because we can put our stop loss below the internal high. Since this was a break back inside the volume profile, and at the volume area high, we have that supply zone. So I don't really want to see it go past it again, breaking structure from the top down. Technically, you should put your stop here, but because it's such a clean pool, I would want lower, and it will allow us to de-risk ourselves quicker, right? But again, it's during a time zone where I am not really trading. But let's see. SFP that high so far. Let's just keep our stop here. There is your tap. Now I would move my stop loss to here. This was 0.66. This is 0.33. meaning now we're only risking 0.5%. There you go. Move to the downside. Move to the downside. Initial trade. Around the 3 RR now. Where is that volume area low? I would hit a TP here. Let's hit a 50% TP. So we realized 1.5%. And we have a risk-free trade now. Stop loss is still at a 0.5%, but we already realized 1.5. So we're definitely in a 1% gain. Now, normally with a Model 1, I did say right here, watch out with taking partial TPs in a distribution schematic because the range low is the target. And I remember this trade. During those trades, you don't have, or we didn't have, a proper accumulation schematic prior, right? Because right here, we have, if there's the chance of an accumulation while being in a Model 1 distribution, partial TP at extreme demand. Now, this kind of already hit its target, but this accumulation, but I just don't like to only TP when you're already up 3% at the range low, when, you know, price can just mess around, because also the way we've been coming down is just a liquidity sweep, right? So let's see what happens. Look at that. It's beautiful. It's beautiful. Look at that break here. Look at that break. I want to see what happens real quick. If we take that high, there you go. Wow. Okay. Okay. That's beautiful planning. Beautiful planning. Ugh, absolutely beautiful planning. Okay. As said, it could put in an LPS here. Even though it was kind of already complete, as said, I don't like to take the low only. So we realized 1% on this break. On this break and retest right here. You know, that's on literally on this exact candle. I know I wasn't focused when I started to press play. I kind of realized afterwards when we were here that we had that break here. But the moment you have that break and you see the pull down after tapping into supply right here, and you see it come back up again right on this candle, I would realize more. So initially our entry was here, 0.66 stop. We targeted the low, that was 3 RR. Right here we have a 1.5 RR. We already realized 50%, 1.5 running, so this would be 0.75. I would take out 50%, let's call it 0.4. So we'll have a 1.9%, 1.9% gain, and I would literally, once I see that bullish break, I put my stop break even. Okay? And then we got stopped out for a 1.9% gain. What was the timing? I think still in that Asia. 23rd of May, 440. The short was a Model 1 distribution. Model 1 distribution was a 1.1. Yeah. 1.1. 1.9% gain. And then we're going to say prior to the distribution, we had a clean accumulation. Took a whoa. So what I wrote down was prior to the distribution, we had a clean accumulation. And then for myself, I already know that, like, okay, we probably didn't have like a real good target to aim for besides the range low, because there was no real return to zone whatsoever because it was a very clean accumulation. Hence, I took a partial at the volume area low because I was already up 3%. I de-risk on any bullish breaks against me. So that way I know that, like, okay, it was a 1.9% gain. How did I come at that 1.9? Okay, well, I entered there. I saw the clean accumulation, so I took a partial at Val. And then on the break against me, I took a bit more profit and I de-risked my stop loss. Now, very good trade management by us, which is also a very key factor in trading, managing your trade, right? With other mentors or other trading styles, they will just say, okay, you have your entry and you have your stop loss and take profit, and then you don't touch the trade. I understand where they're coming from, but price can give you more information later, which will influence the trade that you are in, And once you have that more information, you can kind of reassess by then how the trade is going, right? So just because we had that accumulation here, I was kind of hesitant, to just target this low, especially because we're in a massive uptrend, right? Where every range can just break towards the upside very easily. Oh, damn. Okay, I did that a bit too fast. Didn't know it was gonna go that fast. I had a Model 1 at the top, nothing special. Just again, your overall range. Clean the mad zone. Okay. Okay, I think this is actually a perfect moment to stop. We had our range formation here, kind of having that internal accumulation, where we didn't get the full on entry for the long. And now we tap the range high and we're kind of getting that pullback, which is a very good stopping point, because from here we can, create a new range in here, or we come back up and this is our new range, and a lot can happen. The same way we stopped last time, or where we started the first time, actually, this is kind of giving me the same vibes. So very good stopping point. Now let's reassess the trades that we took. 6 to 11, 6, 1, 2, 3, 4, 5, 6 trades in a span of around, let me adjust that. 6 trades in the span of around 4 days. We had a Wyckoff Model 2 distribution trade with a 3% gain. Then we had again a Model 2 distribution trade, which was a loss, which ended up turning into a Model 1, if you guys remembered, which was a 2% gain. Then we had that Model 1 for the 1.7% that we managed really good. And then we had that, that awkward timing around 10, where I don't really want to trade because it's after the New York session hours. And we were stuck between that accumulation and distribution, where the distribution ended up winning for a tiny 0.3% loss. And then we had that short, which was a nice 1.9% gain, also with very good trade management. Looking at the notes, we have that we should pay attention to the higher time frame environment if we can, maybe exceed our target for a better RR and a better gain on the trade. Then this was just unfortunate. These type of trades happen. This 1% loss, don't be really bothered about it, because right after this loss, we made it back and then twice as much, right? From a 1% loss immediately, 36 minutes later to that 2% gain. Nice 1% gain. This was just a fixed setup, nothing special. We knew the risk of this one, the timing, and then we had the nice trade for 1.9% gain. So overall, pretty consistent backtesting. We only traded Wyckoff. That's pretty funny. We only traded Wyckoff Model 1s and Model 2s. As you can see, they can happen on any time frame at any time, but some work better than others. And that's, looking at, okay, what did the 3 taps actually do? Did they meet all the requirement? Is the timing okay? Are they in actual trading sessions, Because this one that didn't work, it wasn't in the trading session. And technically speaking, this one was also not in the trading session. So once I have 30 trades, or let's say once I have 25 trades on each pair, we will actually go through the confirmation and the result and see when all the losses occurred. Because if we look at the last 6 trades that we took, we can already tell that the only 2 losses that we took were 2 distribution trades prior to the session, or not in a trading session, because this was before London Open and this was after New York. So if that's going to be a repeating pattern, we have it on paper now. So we can just see that, every time I try to take a Wyckoff trade when we're not in a trading session, it doesn't work. So guess what? Maybe we shouldn't be doing it anymore, right? And that's how we learn over time. So let me save this. It's all on auto save, but I like to double check it. So overall, we made 3.25, 2.25, 4.25, 6, 8, around 7.7%. So 7.7% in around 4 days is very nice. That's I aim for 10% a week. So we're on schedule, and we're only trading Pepe. And normally I also trade Bitcoin and gold and euro. So overall successful backtesting session. I hope you guys learned from it. If you have any questions, just comment below, and I will see you guys tomorrow on Monday Open. Peace.